Hello everyone, this is Crash Hunters over here. In this video, I will speak about trading a little bit, about deals that you're gonna take in the market. And as you can see over here, there's a pyramid and I have 3 points. I will start from the top, which is controlling emotions. So controlling emotions meaning that before taking any trade, you have to look for a setup. You have to look for a trading plan. You have to look for a price section, a reaction from a certain supply or demand zone, right? And once you have a checklist of all of these factors in action, you will just take the trade. And with that said, you won't have any negative emotions into that trade. I remember back in the days, I will see the price reached a certain supply zone and I will immediately jump in the trade. I will just sell, right? It's a supply, I will sell. And I don't know where should I exit, where is my stop loss, and I just got lost in the market, okay? And believe me, many times the market go against me and I will freak out. I don't have any plan. I don't know what is the setup, and it was actually crazy. Okay, so controlling emotions is really important, and you have to combine it basically with these few factors that I mentioned, which is trading plan, trading setup. It's really crucial. Okay, without this, you will get lost basically, and you will lose ton of money because of that. Controlling your risk, it's the second factor in this pyramid, and I will give the whole credit for it because, like, if you have no control over your risk, it is actually a total disaster. You will lose the account and basically you will blow out. Okay, so you have to look for a certain risk reward ratio in this particular setup. If the trade play out, then it play out. And I did mention it for you before. I have a trade in gold actually, and my risk actually was just $10. And what I had done, I make that risk to go and to be almost a $60. And guess what? I have 4 trades, and all of these trades went into a very big drawdown. And here I broke basically this rule, and it did affect me magnificently. So for me right now, I'm just following it, and I hope everything will go as planned, right? Third point in this pyramid is basically the execution, no hesitation, and it goes to once you have a certain trade setup, a certain plan on the chart, certain reaction in the chart, and like you have the whole idea of this area, where assets to buy or to sell. You just have to open the trade basically. There is no need to hesitate. There is no need to doubt. Once the trade uh, goes into action, like you will see basically it's a supply zone. You have the setup, you have the trading plan, you have the risk reward, and you are watching on the maybe smaller frames that the market is showing you he gonna sell, right? And you are waiting for this moment, right? For a lot of time, maybe 2 or 3 hours, I don't know, maybe 1 2 days. And once everything play out, just take the trade, okay? Don't hesitate over it. It's actually also important because this point for me back in the days, I had such trades where I don't know, I just um, went away from my laptop or my iPad once I see the whole setup, the whole everything was perfect actually. I didn't take the trade because I hesitated, okay? And I missed the move. And what I will do after, I will look for I don't know, a certain move in the market and I will just take that trade and I will be in a loss after it. And that's it. So basically I missed the bigger move in the market. I missed the cleanest opportunity that I seen it gonna happen in the market. Okay, so no hesitation. It's really important. It's crucial as well. So here is the capital management, and I will speak about few points as well. So sometimes you will just take one trade, and in this trade you have a certain risk reward, and you have to know all of that. Okay, how much you're gonna risk, how much you are willing to take, and it all should goes with the plan, right? We go to the dual trades. It's really important. In this case, everything will change. You will take multiple positions in the market, and this one, it would make a huge difference in comparison with the other one. Okay, so basically, like before, you are looking for 1 to 5 risk reward on maybe one position in the market, and then at the same setup, you took 3 more trades. Okay, here you have basically to modify the whole risk, meaning that your risk within this setup, within one position, will get bigger with this one. Okay, so you took maybe 2 extra positions, now you have 3 positions, you are risking 3 to make 15, right? So 1 to 5 with one trade, with one position, and you put 2 more positions. So you are risking basically, I don't know, 3 to 5, right? 3 to 5, if I'm not mistaken. Yeah, 3 to 5. Okay, so we go again here to the day. So there's some trades which could take a day, which could take half a day, which could take few hours. It is also important to understand this. Sometimes the market won't move like in one way towards your TP, okay? And the same thing goes towards your stop loss. So don't hesitate over it and just go with the trading plan. And we have here a week where some trades will take a lot of time. Those who take swing positions, it could take 3 days, 4 days, maybe 5 days, something like this. And you also have to capitalize that in your head, and you have to understand that this is your target. My target is long. Like, you have to understand this, okay? Because back in the days, sometimes I look for such trades. I go into the market, I take some positions, and I don't know, maybe one day, like I will wait one day and a half, and the market gave me a certain, I don't know, rewards, right? Like 20% out of the 100% that I was looking for, right? And I will just close the trade with that 20. And maybe in a day and a half more, I will see if I held that position, I would make actually a 70 or 80 or maybe even 100. Okay, so just keep that in your head. Okay, P&L ratio. This one is actually also important, and what I mean by that is that you have 3 positions, right? You took 3 trades, and each trade is 1 to 1. Once the trade goes into profit, you will close it with 0.20% in profit, or maybe 0.40 or 0.50. But once the trade goes against you, you will hold all that loss. You will lose maybe 0.90, or maybe you will lose the whole trade, right? Like you are planning to lose one to make one, and you're definitely gonna lose that one, right? Because the trade is going against you, and it's gonna hit your stop loss. But in case the trade is in your favor, you'll just close with really minimum profit. And sometimes I do struggle with this, honestly speaking, even nowadays, but I just try my best to control that and to minimize that mistake. Average risk is basically a combination between 2 factors: the lot size and the risk per lot size as well. So you don't have to jump from one lot to a different lot each day or maybe each week. It will really impact your trading performance, your trading strategy, your trading psychology. At the same time, increasing your lot size and decreasing your risk, it will leave you basically to a very narrow area in the market. Okay, like sometimes you put a stop at this level, but once you have a small lot size, maybe your stop will be a little bit lower and the market has no chance to hit it. And that's what I mean. So you will lose that. So you will lose the whole trade with that big lot. Okay, so just understand the average risk, understand your edge with that one. It's actually important. And don't look for big lot sizes. You will actually lose with it. Okay, you will lose unless it is comfortable for you, unless it is comfortable for your account. Okay, there is no pressure on your account. There is no pressure on you mentally or psychologically. Okay, go for it. Why not? But in case the opposite, I really don't recommend you to do that. The max risk is basically, it is the risk, the maximum risk that you have to take each day. Okay, so you have $1,000 account and you basically trading today and you lost maybe $250. You don't need to trade anymore, my friend. You just postpone that, I don't know, excitement for next week or maybe in next 2 weeks to come back again and to look for opportunities and to trade one more time. Okay, at some point you also can look for it from that corner, which is like you have maybe 10 trades this day and 7 of them went into losses, 3 into winners, and basically you took a lot of risk. You don't need to trade anymore. Stop trading. That's it. Okay, managing each trade. So the entry, once you have the setup, once you have the plan before taking that entry position, you are good to go, right? You execute that trade, you have to have a stop loss and a TP, okay? It's really important. You don't need to jump into trades without that one, without understanding why you take this trade, without understanding where's your TP, where's your stop loss, what happens if the market touch a certain level in the way that he's going through your target and the market touch a certain level. What happens if there is a different reaction on that level? So if he go like if you see a reaction and the market is not going your way after all from that level, what you have to do, okay? And stop loss and TP are very important. For me personally, like I move, for me immediately, I move my stop loss from the initial one, I move it to the break even, right, at my entry point, or a few pips below my entry point, okay, in order to secure the trade in case the market is rejecting from a lower level. And sometimes it do happen actually, okay? Securing 50% in a win or a loss. Sometimes you and like you took a trade and he goes, I don't know, maybe like you took that trade and it is 1-to-1 and he almost hit your target, okay, and then he dropped back again. So what you have to do is either to close the trade manually, okay, or to close it by moving the stop above the entry point, right, or at the entry point in order not to lose money from your capital, okay. And there is always another day and there is always another trade you can make on the chart. Same thing goes for losses in case, let's say, you've seen a very strong price action going in the market and you've seen a very important level got broken in the market. You can cut your losses short, is that instead of waiting for it to, I don't know, be hitting with negative 200, you can, you know, close it with negative 120 or 100, okay? So as simple as that. But it's really crucial to understand the trading plan, okay? To understand what happened when the market visit a certain level. You have to understand the reaction on that level. You have to understand the candlesticks as well in order to make a final decision, because that will goes back again and it will affect your P&L, okay? The exit is very crucial, okay? Once you see the price reach a certain area and once you see the price is rejecting to go to your target from that level, he cannot break that level, you can make a decision over here, which is either moving the stops or just exiting the trade. Okay. And there is one more important point, which is the invalidation. Invalidation meaning that, like, once the trade goes to a certain area, then he got rejected one time, and then he got rejected another time. You basically, your trade is invalid. So what you have to do is to close the trade as soon as possible. Okay, and I do face this with the gold market a lot of times, honestly. Okay, so invalidation is really crucial to understand. Will the market, will it push up more from that area? Will it respect the higher area or not? Okay, and you have to understand the candlesticks that the market is printing on the chart, and you have to understand all of that. If you see a rejection, if you see invalidation in the structure, in the lows, in the highs, in the closing of the candles, then just close the trade. That's it. Look for another setup another day. Okay, so this is it for this video. I hope you gained some important points. Like most of these points, I actually struggled with, especially controlling the emotions with the setup, without the setup of the trade, with the trading plan, and without the trading plan. Sometimes I really struggle with this for no reason, honestly. Maybe this one as well. It was also crucial for me. So just keep it in your head. Try your best to control these 3 points. They are really important. And to control your P&L ratio. I did explain that, I think, in a decent way, maybe. And the average risk as well. Okay, it's also important. Okay, this is it for this video. If you want to ask me any question, please leave a comment in the comment section, and I will answer you for sure. See ya.